In today's weekly Forex forecast, we're talking about the DXY, the Euro, the Pound, the Euro versus the Australian dollar, and also gold. Now, before we get started, guys, if you want my help with your trading, including seeing my trades live, 2 weekly VIP videos, and real-time market updates, that includes 5 to 10 or even more market updates throughout the day, all hosted within Discord, plus full access to the course, check out the link in the description of this video for 85% off lifetime access to VIP. And as I've said recently too, if for whatever reason you don't love it, contact me by email within 7 days of purchasing and I will refund every penny, no questions asked. So it's a risk-free way to get into Discord and see what VIP is all about. All right, so looking at the DXY, let's start here on the monthly time frame. This is what we discussed here for the past few weeks, where you can see going back to 2011, we have this channel. Now, I'm not going to spend too much time here because we've talked about this many, many times in previous videos, but you can see that off of that 2011 low, okay, we do have a very nice channel here that the DXY is currently back above. Okay, so this is significant because, back here in June, we saw the DXY close below this. Now we're back above. So that is technically a bullish reclaim here from the US dollar. Okay, so if we move into the weekly time frame, you can see where 2 weeks ago, we actually got the market closing back above here on this candle. So you can see lows here at 97.70. This closed back above. And furthermore, what I told VIP members too, this is the benefit of being in Discord, is that this trend line here from the 2025 high, or very close to it, we saw the market, actually the DXY here, close above this level on July 10th. So that was significant because it was the first daily close above this descending trend line from the February high. So even back here, you can see the market never closed a day above it. Here on July 10th, that was the first daily close above. Now, this past Wednesday, okay, last week, we did see the DXY test 97.70 again. With that Wednesday volatility, obviously we know all about the Trump versus Powell drama that's going on right now, which probably won't end anytime soon, but that's what triggered that move down there toward 97.70, which you can see the DXY bounced exactly from that. Now, one thing I have talked about recently, though, is the fact that we have these imbalances down here just below this mark. So this could be a factor for next week, okay, because we know a lot of times when the DXY does give a macro bottom, if that's what we're going to get here, the market can go sideways here for weeks or even potentially months and kind of chop around for a while. So this is something to at least pay attention to, know it's there. Okay, it's not going to be a factor right away, just because you can see that right now, those imbalances are protected by a trend line here on the 4-hour time frame that I also mentioned to Discord members this morning before the market was testing it. And you can see where we got that retest here earlier today. Okay, so right now, again, these imbalances down here are protected by this trend line. So if we were to see the DXY, break below this sometime next week or over the coming weeks, then these areas could become a factor, okay, as potential, magnets, so to speak, or support areas for the DXY. So right now, guys, what we're dealing with here and what we've talked about in recent videos is obviously we have that trend line, but we've also got this range back here for the DXY with range highs around 99.35 and lows down here at 97.70. So what I've discussed recently is this high time frame close back here. This was a reclaim of the range, making this a failed breakdown. A lot of times when you see this, you do get that extended move in the opposite direction. In this case, it would be a move back there toward 99.35, okay? Now, the reason that the DXY, though, is having some issues here this week is this area through here, okay, right around 98.55, okay, this general area is the 50%. This is the mid-range of this range back here, okay? So this is the 50% of that range, and that's exactly why we're seeing the US dollar just kind of chop around here. So what I've told VIP members, all week long in the VIP videos is that really, as long as the DXY is just kind of chopping around this area, like this, in my opinion, is no man's land. If you want to get better at trading, immediately, what you want to do is look for the extremes. Okay, so in a range like this, you've got, these are your extremes, 97.70, 99.35. Everything in between here, when you get in the middle like this of a range, the 50%, you're going to see a lot of chop, okay? Now back here, you could have had some opportunities, but right now with the DXY, this area through here is very difficult to trade. And furthermore, you can see here on Friday that we do have a gap from Thursday's close up here on this candle. Okay, so this is also now going to be resistance. So we know that 98.55 or thereabouts is going to be resistance. Now we have this open gap back here where we could see the market close this and then potentially move lower again. Okay, so keep that in mind as we head into next week here for the DXY. Really choppy though through this mid-range. But as long as the market's above 97.70 on the high time frames, I am relatively bullish on the US dollar, looking for that move back there toward those range highs around 99.30. Okay, so let's move along here to the EURUSD. And as always, guys, if you're enjoying the content, if it's helping, be sure to subscribe to the channel. Also hit that like button because I really appreciate it. It does help out these videos because they do take a long time to make. So looking at the EURUSD here on the daily time frame, you can see where we did get a break below that main channel here. This, guys, right here is why I was relatively bearish on the euro to start July. And I was even, if we look at the 4-hour time frame, I was even shorting this market, which I announced in real time in Discord. So benefit of being a VIP here, I announced my short through here. Stop loss was above the highs, and my first target was down here at these lows, took half off here and half off through this area, which I've since taken off. There was a single print down here that was my target. And so that was obviously satisfied here with this breakdown. Okay. Now you can see that this was our breakdown back here. And this was that Wednesday volatility that we talked about. And you can see the retest up here as resistance, right? So pretty clean here so far from the euro, despite the fact that it is very sideways since that time. And really, this is something that I alluded to, guys, in a video last week, where I mentioned that I believe it was the midweek forecast, or the midweek outlook, I should say. This range right here from Wednesday's candle, a lot of times when you get a large candle like that and you get wicks like this, the market will spend some time there, meaning, potentially days of just churning back and forth here. And that's exactly what we've seen here so far, right? So we've got support down here around 115.85. We've got resistance up there around 116.60 that was tested here today. But for the most part though, guys, I think going into next week, this right here is your range until proven otherwise, okay? Now, the one thing you've got to be aware of though, is when we look at the DXY, yes, it is coming off of this trend line. We have that open gap up here at resistance and also those imbalances down here. So if that becomes a factor, then of course we could see the euro actually come up here and sweep that high and retest areas like 117.50, okay? Now, it would take something pretty significant though to see the euro get all the way back up there and then DXY test 97.50. But as we all know, with Trump in office right now, anything can happen on any day, okay? So it's important to stay flexible here with these markets. But right now, really, as long as the euro's between these two areas, guys, and really within this Wednesday range, there's really not a whole lot to do here, in my opinion. So thinking along the terms of, trading the extremes here, I mean, if we were to get the market coming up here and testing this high, sweeping that high, that would be ideal, in my opinion, for a short. Not saying it will happen, but that would be ideal for a new short. Alternatively, obviously, if we get the market breaking below areas like this here, right around 115.85 on the high time frames, that's going to open up this region down here. Now, that would not be a short for me, guys, because I don't short low. And that's really important within the context of this move lower. If you're shorting a breakdown below here, you're kind of playing with fire because there is a chance that could become a failed breakdown. So if you're shorting down here after this kind of move, you're technically shorting low. And that's why I'm saying I would love to see a move up here to sweep that high, get a retest of 117.50, and then potentially look for shorts from there. Okay, not saying it will happen again, but it could happen over the coming days. And if it did, I would certainly be interested in that. The reason though, guys, too, I wouldn't short below 115.85 is simply because we've talked about this a lot before too, but you can see here on the 3-month time frame, this goes back very far. This is a 40-year pattern here, going back to 1985, using those pre-euro basket of currency data here prior to 1999. And so what you get is you get this channel where the euro broke down back here in 2022. It retested this level in 2023. It closed June back above it. Okay, so that is significant, at least right now. So the reason that, again, I wouldn't be shorting the euro down there into 115.30 or so is that you can see here on the weekly chart, right? This is about where that level is. Okay, at least the best approximation I can make. You can see this little doji through here on the weekly. So right down here around 115.30, okay, you can see where this is going to be a critical factor for the euro as support. All right, so anybody shorting, my point here is that anybody shorting on a breakdown below levels like this here, you're really playing with fire because you're A, shorting low, and B, you're shorting right into that key support area. Okay, so really, I mean, for me, guys, if the euro does break down from here and we don't get a retest up there around 117.50, up here in this area, like I talked about, then I will be looking for, really waiting for, price action through here. See what we get down here, see what the DXY looks like at the time. Either that becomes a buy there or we get that sustained break below this area for this to become a failed breakout and we get that push lower down here towards some of these imbalances, okay? So pretty unfavorable though right now with the euro, like I said, with the market just going sideways here ever since that Wednesday candle. Now with the pound, okay, kind of similar situation here with this market. Looking at the daily chart first, which you can see that we did have the breakdown of that 2025 trend line that we discussed in last weekend's forecast. So off of these lows down here, you can see where Monday did break below. All right, so if we move in here, you can see where we got this breakdown here on this candle. So right here, we got the breakdown, retest, retest. Okay, so pretty decent right there if you were looking for a short, if you're looking for, obviously a range trade. But so far, guys, I mean, the market has held up pretty well here at the lows, right? Now, the one thing about the pound, and I talked about this before too, is, and the only way that this happens is probably if the DXY gets back there toward 97.50 to clean up those sell side imbalances. But you've got a couple of things to be aware of next week. And the first one is if we take a look at the 4-hour time frame. So again, this right here, guys, this is how clean this level is. This is the 2025 trend line. Here on the 4-hour time frame, you can see support right here. We got the breakdown and below, retest, retest, okay? Now, above these areas, okay, and back here toward this low, you do have this up here, what's called a poor high or an unfinished auction off of this high right through here. A lot of times these get swept in ranging markets, although not all the time. There are no guarantees. And then you've also got this area up here, this single print, which is an imbalance following that push lower. Okay, so we got this expansion out of the range, and we never saw a retest of this area. So this could, okay, keyword there is could, become a factor next week. Now, I certainly would not be buying this market toward that area, but if we were to get the pound coming up here and filling in this area back here, retesting these lows, right, something like this, whether it's from current prices or down here, but something like this, that would be very appealing, in my opinion, for a short from that area. But again, the only way that this happens is probably if the DXY gets down there toward 97.50, which it would have to break below this trend line here on the 4-hour. Keep in mind that trend line right now is protecting those sell side imbalances. So right now, guys, there's nothing to tell me that this is likely for the pound, okay? If the DXY gets below that trend line, then yes, we have a likely scenario where we get the DXY rotating lower and the pound coming up here and cleaning up these areas first before we get that rotation lower. All right, so that is what I'm looking at here on the pound. Not a whole lot to do though. Like I said, I mean, with the euro too, these markets right now are just very congested. So this is the kind of stuff I like to avoid if I'm going to trade it. Like I said, I want to trade the extremes, and knowing that the market is holding below that 2025 trend line, I'm really only looking for shorts right now. But again, I want to short high, right? I want to short the extremes. I don't want to be looking for, price action in this area. And I certainly don't want to be trying to short low on a breakdown. Okay. So that's just the way that I trade. That's just my style. That's what works best for me. Obviously, that's not going to apply for everyone. All right. So now let's take a look at this cross here, euro versus the Australian dollar, which first and foremost, guys, I don't typically trade crosses. Okay. I don't like the way they move a lot of times. They're not as clean as a lot of the major currency pairs. The spreads can be very unfavorable around news events. The same thing with slippage. However, I made an exception here for this market last week because of a few things here. So we talked about this a lot in VIP. In fact, we talked about this area up here, this resistance that you see here, which I'll explain in a moment. But we talked about this in VIP and Discord when the market was back here. So what I was talking about back here was that we would likely see the market come up here, take out, some of these areas, retest this region through here, and then potentially give us that rotation lower. Now, we haven't gotten that second part of this yet. However, I did short this market up here around 79.22. Okay, so right through here on Thursday. Now, this is a case where I'm going to be moving my stop loss down. It'll pretty much be a risk-free trade at this point. But looking here at the weekly time frame, why did I short this market? Well, first of all, we have a breakdown of this trend line from back here in February. So you can see on the weekly, we have this low back here. We've got this low, these lows through here, and then we had this weekly candle. So this broke that level. We saw the retest here last week. And this candle also, this red candle, what's important here is that the body actually engulfed the previous 3 weeks. So it took out 3 weeks of gains in one candle. So pretty bearish look here to this market. Furthermore, we have the potential for this to be a lower high. Okay, so a lot of factors going into this. However, the way that I came up with this level up here, okay, and again, I had this level marked, guys, when the market was back here. This isn't something I drew after the fact. This is something that I drew when the market was way back here. And the way I got this was, this is what's called a 2-month composite point of control. Okay, so using TPO, looking at the last 2 months, so June and July, really that's just a fancy way of saying that between June and July, this right here, this level was the highest volume level in the market for the euro versus the Australian dollar. So that's how we came up with this level up here. Okay, so pretty clear there. Highest volume point within this congestion. Okay, so all of those things combined, guys, gave us a very high probability short from this area, from that key level. All right, so my invalidation for this is really anything above here, right? If we're trading back above this, then this idea is invalidated. Like I said, though, I will be trailing my stop down though, just to kind of protect myself a little bit here with this currency cross. Okay, now one thing I want to talk about before we move on to gold is if we look here at the 4-hour time frame, these purple lines, guys, poor highs and lows, unfinished auctions at these areas. So, potential for those to be swept. You can see though where the market is finding some support down here at these highs, and no surprise there, right? No coincidence there. This high up here though, we could see a sweep early next week. A lot of times you will get a retrace of these candles or a partial retrace of these candles going into the next week. And furthermore too, you also have this upper wick here, not the biggest upper wick out there, but still we could see the market come up here and fill this in a little bit next week. So one thing I'd watch is this high from right back here. So if you'll notice here, if we look at the 4-hour time frame, this also lines up with this move lower. Okay, so if you'll notice, we had the market going sideways up here. Okay, we then had this candle break down and then these highs here. So you have an unfinished auction here that could get swept. You also have this red candle here that broke that recent range and no retrace into it. Okay, so one thing that we can get, and don't hold me to this, guys, this is not saying that this is what will happen. It's also certainly not something I would trade, although I'm already short here. But I would not trade, I don't just draw random lines on a chart and hope for the best. I'm just showing you one possible scenario that we could get next week. So if the market does find support, continues to find support over here at these highs, we could get a move up here into this area, fill in that imbalance before the push lower, okay? So I do think that if we extend this over, what I would watch is this entire region, okay? So you've got all of these lows back here, you've got this low through here, following that move lower, and then these highs that like I said, could get swept going into next week, okay? So as long as we're below this area up here though, guys, I like this market lower. Again, I don't typically trade crosses, but I did make an exception here because of the factors that I discussed. Okay, so let's wrap things up here with gold, XAUUSD, starting here on the daily time frame. So I talked about this last week, but one factor here that does intrigue me is this trend line off of that low from back there in 2024. And the reason that this intrigues me is because this here is the 2024 low. Right through here was the 2025 low. Okay, so you've got yearly lows here off of this trend line, and there's nothing to say, okay, there's no guarantee that the market gets down there over the coming weeks. I want to point that out here. First and foremost, I mean, we could continue to go higher and then revisit this somewhere in late 2025, early 2026. Okay, that's certainly a possibility, especially in these current conditions. Okay, but the big question that I'm asking right now is, you can see here, we have this May trend line that we've talked about. So off of these lows, this is where gold bounced last week. And the question is, do we get below this to revisit the range lows, clean up this unfinished auction down here, potentially retest that 2024 trend line before higher, or do we simply just go higher out of this current range? Okay. And I think what this is going to come down to right now, first of all, gold is very unfavorable in my opinion. I mean, this is a case where you can see here over the past few weeks that the market has just been very sideways, right? I mean, especially here within this very tight congestion. So I think that at least for me, this is a time to stand aside. I wasn't a short here, got out at pretty much break even. So, no harm done there. And for now, guys, I'm going to wait for resolution. And what that would look like here, you can see that we have this May trend line down here that we've discussed. And we also have this descending channel, okay? So equidistant channel here off of those highs and lows, technically a downtrend since June. However, at the same time, we also have this trend line down here from that May low. So a lot of factors to consider. Okay, furthermore, we have the DXY doing what it's doing, holding above 97.70. So again, there's a lot of factors to consider here for gold. And really, for now, this is no man's land, in my opinion. This is the time to do nothing unless, your forte is trading tight ranges like this, in which case this is, your paradise, I guess, so to speak. But for me, guys, what I'm looking for is either we get the break above here or we get the break down below here. That is it, right? We either get a sustained break above, sustained break below. Obviously, it does depend on what the US dollar is doing too, considering the inverse correlation there between those two. Okay, so right now, though, like I said, a lot of congestion here for gold. Get above this area around 33.70. We're looking at potentially a move back there toward those highs. Get below areas like this down here that made trend line, down there around 33.10 or so currently. And we're looking at a move back here towards some of these lows, potentially a completion of this descending channel. And, look, I would personally love to see this rotate lower simply because it's so clean right now with this trend line. And furthermore, we have, like I said, that unfinished auction from down there at 31.54, which also intersects potentially with that trend line from 2024. Okay, so you can see it here that if we were to get something here over the coming weeks, in there toward like, let's say the mid-August, okay? A breakdown from here, this area down here is just so clean for gold that I would A, love to short the market toward that area, and B, potentially buy gold in that region if we were to get it. But like I said, no guarantee that if we were to get back above 33.70, that I think we're headed back there toward those all-time highs, and gold starts to look, even more bullish because now we have higher lows into that support area, okay? So I hope this has helped, guys. If it has, be sure to subscribe to the channel, hit that like button. Don't forget to join us in VIP. Check out that link in the description for 85% off lifetime access. Have a great weekend, and I will talk to you again on Monday.